at the right time.
Good morning and thanks for joining in. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Asian markets trade with moderate gains as investors look for further cues from the Federal Reserve policy meet that begins today. Lenders of Jet Airways have decided to send the crisis-hit airline for insolvency proceedings due to lack of favorable bids. HDFC AMC will purchase NCDs issued by the SL Group amounting to 500 crore rupees in order to save investors of its fixed maturity plans from any potential losses. Fitch Ratings has downgraded India's growth forecast for the current financial year to 6.6% from 6.8% owing to a slowdown in the manufacturing and agriculture sectors over the last year. And Chinese lenders, including the Exim Bank of China, have demanded $2.1 billion from Anil Ambani's Reliance Communications, according to an exchange filing. Let's talk about the US markets now. They began the trading week on a moderately positive note, with the Dow and the S&P 500 eking out gains, both gaining just under 0.1%. The Nasdaq Composite outperformed, on the other hand, gaining about 0.6% on account of gains in the large tech shares, that is, the FANG stocks. Investors now await more cues from the Federal Reserve, whose two-day meeting begins today. Renita Young of Bloomberg News brings you this update.
U.S. equities ended higher on Monday, with tech shares leading the way one day before the Federal Reserve is set to meet and likely talk about interest rates. But the big question here, will the Fed continue to keep interest rates the same, keeping that patient stance that it's been talking about for months? Or will the Federal Reserve decide to become a little bit more dovish and lower interest rates since the global economy has shown signs of faltering? This is happening as China trade still remains in the background and uncertainty around that still remains as well. Meanwhile, we did see a Federal Reserve survey of factories in New York State plunged in June by the most on record. That briefly sent the U.S. dollar down versus major currency competitors. And we saw also that treasuries were mostly lower and crude oil slumped for the very first time in 3 sessions. Now, we did see in company news the FANG stocks led the way, with Facebook, Apple, Netflix, and Google parent Alphabet leading the Nasdaq Composite higher. And we also saw a couple of deals happen, with Pfizer buying Array for $48 a share cash, and Sotheby's to be acquired by Patrick Drahe for a $3.7 billion deal. And that's a look at your Monday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
Now, you heard mention of the fact that this is going to be a week focused on central banks. There's a lot happening this week, but there's also a question about whether actually anything will be announced. So the focus is shifting, of course, to trade wars. It has been close to 2 months since trade talks began between the US and China, and they came to a standstill. US Commerce Secretary Wilbur Ross told Bloomberg that the G20 is not an ideal forum to strike a deal. The bigger question that remains, though, is will the meeting between Trump and Xi that has been so much talked about even happen? Selena Wang of Bloomberg News reports.
We also don't know if the Trump and Xi meeting is even going to happen. And there really was never an expectation that they would realistically be able to agree on thousands of pages of documents at the sidelines of the G20. So Wilbur Ross does seem to be tempering expectations somewhat, but it would be a big deal even if they did agree to restart talks at the G20, given that talks have broken down and stalled since early May. Meanwhile, Bloomberg is reporting that the tone from Trump seems to have changed a bit. He doesn't want to jeopardize the chances of Xi agreeing to a meeting, and we've reported that he personally stepped in to ask Pence to postpone a planned harsh speech on June 4th that would have criticized China's human rights record. He is facing escalating, mounting political and economic costs at home. We are closely watching this weeks-long hearing in which hundreds of companies and stakeholders are coming together to publicly explain why these tariffs are bad for their businesses and why it's bad for the American economy.
So, Selena, we've seen a decline of about $7.5 billion in China's holdings of US Treasuries back in April. Is that significant?
The cut in treasuries, as you mentioned before, is actually nearly a 2-year low, but it is really difficult to read into these numbers and whether or not it's tied into these broader geopolitical tensions. But it's worth mentioning that these latest numbers were collected before May, before the latest escalation in the trade war. And even though it's been speculated that China could use its holdings of U.S. treasuries as retaliation against the U.S., its largely consensus view is that this is quite improbable. First of all, it would be very hard for China to find another place to park its assets, a place that would be able to absorb the massive amount of investment, as well as that would also be safe and liquid. In addition to that, if China did massively dump treasuries, it would cause the price to lower. It would devalue China's current holdings of U.S. treasuries, could even spark a dollar rally. So the consensus view is that the costs here really outweigh the benefits.
All right. Now, with all of that in context, let's have a look at what's happening in the Asian markets this morning. Sophie Kamruddin is joining us live from the Hong Kong studios with everything that's happening. Good morning, Sophie. The Chinese markets are on stream as well as the Hong Kong markets. How are things looking this morning?
Well, Greater China markets kicking off right there. We do have them coming online slightly higher. The Hang Seng adding 0.1%, building on Monday's gains. And we're seeing the Shanghai Composite gaining ground too, up about 0.1%. So joining that slow drift higher that we're seeing across the region after a 4-day decline for the Asian benchmark. So little enthusiasm seen then ahead of the Fed's decision that will be scrutinized for clues on the direction and pace of anticipated easing. Now, in today's data lineup, we just got home price data from China and Australia, but not much in the way of big catalysts to move the dial. But we do have the Aussie dollar sliding further at 5-month lows as we got the RBA meeting minutes, which indicate that further easing is more likely than not in Australia. Now, the CBA has joined the chorus of expectation for more rate cuts this year, penciling in 2 more to take the key rate to 0.75%. And I just want to highlight the yen as well, trading near a 1-week low, while the Topix is edging higher, with pharma and auto stocks providing a boost to that benchmark in Japan. Back to you.
Thanks so much for that, Sophie. Now, on to updates from Hong Kong, where certain workplaces are beginning to reopen after a 2-day shutdown and after over 2 million protesters took to the streets against a controversial extradition bill. Protesters continue to persist with the demand that a leader, Carrie Lam, step down. But who could be her potential replacement? Yvonne Man reports from the ground in Hong Kong.
We see the central government offices here at LegCo are reopening here today. This is after some of the major side street roads were reopened after protesters stormed from here to outside of Carrie Lam's office yesterday and occupied those streets. That has seemed to be calmed down a bit here now. Some of these protesters I was speaking to saying it's time to take a brief pause here today. That's why we're seeing it's looking a bit sparse here at LegCo as well. I counted about more than a dozen or so people still holding down the fort here today. But as you mentioned, with that police move to back down from calling last Wednesday's violence a riot, that is significant. That was one of the key concerns from the protesters, that those who were arrested from those clashes could face tougher charges. So this is another victory for the opposition, although they still are fighting for those 2 key requests and demands, which is for, of course, a full extradition of this bill and Carrie Lam to step down. No word yet on when we're going to hear from the chief executive, if she's going to be speaking to media today.
Yeah, let's explore that second demand a little more, Yvonne. If Carrie Lam were to step down, how much of a blow would that be to Beijing?
Well, that's the thing, right? Because a lot of questions on if she does step down, what happens? Well, according to the basic law, the Chief Secretary, Matthew Chung, would step up for up to 6 months. And during that period, it's up to that election committee of 1,200 members to select the next leader. Keep in mind, though, this panel is comprised of political insiders who have loyalty to Beijing. So ultimately, the Communist Party has the final say. So what's going to change? We asked that question to Joshua Wong, the student activist who came to meet with protesters after being released from prison yesterday. Here's what he had to say.
no doubt that Chief Executive of Hong Kong might be the puppet of Beijing. That's the reason for us to organize the umbrella movement 5 years ago to ask for free election. It's time for us to deserve the vote to freely elect the leader of our city.
And the fact is that there are no likely replacements as well. You talk about some of the former contenders like Regina Ip or the former chief executive C.Y. Leung. Those names might still be quite divisive. Also, some other names that people have brought up is John Zeng, the ex-finance secretary, or Jasper Tsang, the ex-LegCo chairman. Those candidates as well seem to be a little bit more sympathetic to the opposition. So some are still saying that, yes, perhaps Carrie Lam is a lame duck, but given the fact that there are no obvious choices at the moment, she may stay in office for now.
All right. Well, with that, let's turn to the Indian markets. Agam Vakil is here and he's ready to tell you all about the day's trade and what's happening in the futures and options space. Good morning, Agam. At least for now, it appears as if there's a little bit of uncertainty going into the decision of the Fed tomorrow in the Asian markets. How are we looking in India?
Well, it's going to be quiet. There's no doubt about that, Alex, because this is the kind of trigger that Indian markets are waiting for. And they're going to wait for, well, the Federal Reserve, even though it doesn't directly concern us as much. For now, the SGX Nifty is as quiet as ever. And as far as yesterday's day of trade is concerned, we did see severe weakness coming in, especially in the last 1 hour of trade, with the broader market indices like the mid-cap and the small-cap indices falling in tandem with the benchmarks, and wasn't very different for the banking indices either. As you can see, a drop of around 1.5%. But as far as ADRs are concerned, Dr. Reddy's and Tata Motors declining along with Vedanta and Wipro, and not too much to move for as far as Infosys is concerned. So almost all the ADRs are currently under pressure. Well, we do have about 331 odd crores of worth of stock moving out from FIIs, which means selling was there from the FIS table. DI surprisingly buying 1,200 crores worth of stock in Indian equity markets. But coming down to contributors, we had essentially the financials, which were down on the indices, along with Kotak Mahindra Bank, Axis Bank, as well as IndusInd Bank. Heavyweight Reliance Industries also weighing down on the indices. But coming down to your futures and options space, well, we did see more shorts building into the system with 2% increase in open interest. The Nifty banking futures, well, saw unwinding coming along with a 10% decline there. Now, we do have the same 500-point range playing on between 11,500 and 12,000 on the upper end. In terms of changes in open interest, we're keeping an eye on the 11,800 mark, where we did see a little more writing along that call. But coming down to your India WIX, that rose and 5.5%, and understandably so. There was weakness, and the put call ratio also came off to around a very neutral level of 1. And in terms of stocks, keeping an eye on Shriram Transport Finance, Apollo Tyres, PVR, Jet Airways is going to be one stock to watch out for after the kind of resolution that we've seen from the lenders to refer it to the IBC, and Oriental Bank, Exide and Tata Communications, among others, which we will be keeping an eye on. It may be, once again, a very quiet day of trade, Alex, and we may see a little more action in stocks.
All right. Thanks so much for that, Agam. Yeah. Well, let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with at least 11 people who have died or are injured, more than 100 injured, following an earthquake in China's Sichuan province. Emergency crews worked through the night to search for survivors. This after the quake struck late on Monday. Now, the epicenter was about 20 kilometers from the city of Chongqing. Damage to houses was reported as far as 200 kilometers away at the nearest major city, Chongqing. Chinese President Xi Jinping, meanwhile, will travel to North Korea on Thursday for talks with Kim Jong-un. That's ahead of the G20 in Osaka. State news in Beijing said Pyongyang said the two-day visit marks the 70th anniversary of ties between the two states and will be Xi's first as Chinese leader. Now, a year after President Trump first met Kim, there is no evidence that North Korea is ready to give up its nuclear weapons program. New New satellite images, meanwhile, have been released showing that the 2 oil tankers that were apparently attacked in the Gulf of Oman last week, the pictures were taken by Maxar Technologies on Monday and show both the Front Altair and the Kukua Courageous. Again, those were the ships that were attacked. The Defense Department has released more photos of the tankers showing the damage from what the administration claims was an attack carried out by Iran. Iran is denying the attacks. Iran, meanwhile, says it will breach the 2015 nuclear deal on uranium stockpiles within days unless Europe helps ease the pressure of U.S. sanctions. Tehran says it will exceed the cap on low-grade uranium reserves on June 27th and is also threatening to raise enrichment beyond the level intended to prevent the making of weapons-grade material. Europe is urging Iran to stick with the agreed-upon deal despite U.S. pressure. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right. Now, Agam mentioned this just a short while back. He spoke about Jet Airways. Lenders are going to take the airline to the National Company Law Tribunal. The creditors who met on Monday had a tough choice after Etihad and the Hinduja Group put some tough conditions in their proposal. Vishwanath Nair reports.
So 6 months since the process for resolving the Jet Airways crisis started, lenders have finally decided that they're going to approach the insolvency and bankruptcy court for a resolution of the case. Now, what we understand from our sources as well as a statement by the lenders is that State Bank of India will be approaching the NCLT for an insolvency proceeding against the airline. There was a statement, as I mentioned earlier, by the Jet Airways lenders where they had mentioned that they had met earlier on Monday where they saw that the only bid that they received, which was from Etihad as well as Hinduja, was a conditional bid, as well as the requirement of investors as well as any kind of exemptions from the market regulator SEBI would be better met under IBC. So these are the reasons why SBI as well as the rest of the lenders decided to go ahead with an insolvency proceeding. They're saying that they have been working tirelessly to resolve Jet Airways outside IBC, but in view of the above, the lenders have decided to seek a resolution within the confines of that specific law. And now, what was this bid that caused them to go for the IBC route? Let's try and understand what Etihad as well as Hinduja Group had proposed as part of their offer for Jet Airways. As part of the offer, what we understand from our sources is that the financial creditors or the lenders to the airline would take about a 95% haircut on their 10,000 crore plus exposure to the airline. The operational creditors, which includes lessors as well as the employees of the airline, would end up taking about a 69% haircut. What we understand is that their dues were about $1.3 billion, against which the bidders are willing to offer only $400 million as a settlement offer. But an important condition that the bidders had put forth was that the financial creditors will be the ones who will be negotiating with the operational creditors and try to get them in on this deal. And unless the operational creditors actually sign up for this deal, Etihad and Hinduja will not go forward. So there were these two sore points. The first was a 95% haircut, as well as the second one on the lenders actually negotiating with the operational creditors. These were the two sore points why the Etihad-Hinduja deal did not go through. Also part of the plan was about a $700 million equity infusion that was proposed by Etihad and Hinduja into Jet Airways so that the airline can be revived again. Remember that Jet Airways has been grounded since April 2019. It has lost many of its slots at various airports. Many of its planes have also actually been repossessed by lessors, as well as the airline senior management has already left, has already resigned and left. And therefore, the airline is currently in a very critical position. And unless this money comes in and a new management comes into the airline, it cannot get back up flying. And that is why the lenders have decided to go for the IBC treatment for Jet Airways, hoping that they will find that new bidder they're looking for.
All right. Now, oil prices have been in focus and they continue to remain volatile after weakness in the US manufacturing and housing sectors raised demand concerns, while the OPEC members continue to dilly-dally about the date for their next meeting. Saudi Energy Minister Khalid Al-Falih said that they hope to continue production cuts into the second half of this year as well. Listen in.
Our intent is to make sure that we continue to work together closely, not just bilaterally, but with all other members of the OPEC Plus coalition. and that the good work we have done over the last 2.5 years continues in the second half of 2019.
Now, if you've been watching Bloomberg Quint for a short while, maybe over the last month, you will know that Brent oil or Brent crude was trading at about $75 to a barrel not too long back. It's trading just above $60 to a barrel now. So that's the context. Now, Neil Atkinson of the International Energy Agency believes that it will be a challenge for the OPEC to maintain the oil prices at suitable levels. Here's what he told Bloomberg Television earlier.
The current market outlook that the IEA put out last Friday suggests that as we move into 2020, that the call on OPEC crude is likely to be lower than it is this year. So obviously they do face a major challenge in balancing the market and keeping the oil price at the kind of levels which is suitable for their interests.
Okay, if you look at the geopolitical risks out there, Neil, can they really throw oil off track, or is it kind of range bound in terms of price?
Well, as far as the geopolitical risk is concerned, obviously the tanker attacks that we've seen in the last few weeks, the 4 a few weeks ago, the 2 at the end of last week, this is obviously raising risk. There's no doubt about that. But so far, the market has reacted in terms of the price in a very limited way because there hasn't actually been a significant supply interruption so far. And essentially, the market has taken the view that there is plenty of supply out there from other countries available. We're seeing expanding production from the United States. Stocks are fairly healthy. And it's been fairly clear from the political messaging that's been put out that an interruption, a significant interruption to supply through the Strait of Hormuz is not something that would be accepted.
Neil, there's a fancy Marshallian cross. See how you do this on a Monday, folks? You get very, very sophisticated of supply and demand dynamics. And in oil, it's always been assumed that's a very tight relationship. There's not much wiggle room. I sense that ebbing away right now, where the market's not as tight as it's been for the last couple of years. Is that true?
Well, what we saw in 2018 in the run-up to the imposition of sanctions against Iran, in anticipation of that, there was a huge increase in production from Saudi Arabia, Iraq, Russia, and, of course, the ongoing production growth in the United States. So we saw a big build-up in stocks. And at the very first part of this year, 2019, we saw another big build-up in stocks. So there's plenty of stock in reserve. There is spare production capacity idle because of the OPEC Plus production cuts. So the market is not perceived as being tight as such. However, on the fundamentals, the market is expected to get tighter as we move through the second and third quarters.
Within that is who controls the price. The belief still is there's a cartel economics that controls the price. Is the cartel dead?
No, the cartel is not dead. The obituary of OPEC has been written many, many times over the years, and doubtless that will come up again in the future, depending on market circumstances. But clearly, if you have decided as an organization and invited other like-minded countries to join you to withdraw 1.2 million barrels a day from the market, that is a decisive action which affects the direction of the price. You have that power, and we'll have to wait and see at the end of this month when the countries meet again if they decide to continue to exercise that power.
Very key comments coming in there. For now, let's turn to the Indian markets again and tell you all about the stocks in news. Mishika Parak is joining in to tell you the stocks that she's listed down. Good morning, Mishika. What do you have on your list today?
Good morning, Alex. There are lots of stocks making news today. The first one is HDFC AMC will purchase SL Group companies' non-convertible debentures of up to 500 crore rupees in a move to rescue investors of its fixed maturity plans, thereby transferring any loss or gain due to the investment from investors to itself. The AMC termed this as a liquidity arrangement to deal with illiquidity issues faced by these debt mutual fund schemes with exposure to NCLT issued by the SL Group of companies. Morgan Stanley says that this move should benefit investors but transfers risk of under-recovery to the company. Then we have Biocon. They've approved the sale of Branded Formulations India to its subsidiary Biocon Biologics for 45 crore rupees. Analysts see this move as a precursor to the IPO for the division, and the company has fixed 1st July as the expected date of completion of the sale. Then let's look at the takeaways from the Coal India analyst meet. The management is optimistic on volume growth despite the on-ground challenges. Indigo is ordering jet engines worth $20 billion from CFM International to power 280 Airbus A320neo and A321neo aircrafts, changing its main engine supplier as problems with Pratt & Whitney's Jet turbofan continue to impact the airline's Airbus 320neo planes. We also have McClure Russell. ICRA downgrades ratings of the company's long-term and short-term borrowings to issuer not cooperating category due to the non-submission of the monthly no default statement by the company. Now let's have a look at the important bulk deals. White Iris Investments buy 2.8 crore shares of Apollo Tyres at 199.8 rupees per share. Then we have Shriram Transport. PEL sells 2 crore shares of Shriram Transport at rupees 1,000 per share. HDFC Mutual Fund buys 63 lakh shares, while SBI Mutual Fund buys 36 lakh shares, both at 1,000 rupees per share.
All right, thanks so much for that, Mishika. Now, on the one hand, India or Indians are among the top internet users in the world, with some estimates pegging them at over 600 million. On the other, more than 800 million people living in Africa are not connected to the internet. But phone makers and internet providers are trying to help. Take a look. All right, well, you'll find several stories like that one on the website bloombergquint.com. In fact, let me tell you about a couple of them. Consensus is building in expectations that India's economic growth is likely to slow in this financial year. Fitch Ratings lowered the country's growth forecast to 6.6% for the current fiscal from 6.8% projected earlier, as manufacturing and agricultural sectors showed signs of slowing over the past year. In its latest global economic outlook, though, the rating agency retained its GDP growth forecast for 2020-21, that is next financial year, at 7.1% and 7% for the year after that, that's 2021-22. And Chinese lenders, including China Development Bank, Industrial and Commercial Bank of China and Exim Bank of China, have demanded at least $2.1 billion from Anil Ambani's Reliance Communications that slid into bankruptcy earlier this year. All right, that's all you need to know going into trade today. Do stay tuned. This is Bloomberg Quint.